This is January 1st, 2026. Current time is 8:12 in the a.m. Eastern Standard Time. Year-end review for the SP 500. You're trading where you're supposed to be at on a yearly time frame. NASDAQ trading where you're supposed to be. The Dow Jones trading slightly above where you're supposed to be, but still within reason. Tesla, you're trading where you're supposed to be. JP Morgan, where you're supposed to be. Everything is going to be where it's supposed to be. Dominion Energy, lower than you're supposed to be, barely. Google, you're slightly above where you're supposed to be, all within statistical reason to be fine anyway. Amazon, where you're supposed to be. Visa, where you're supposed to be. Apple, within one deviation from where you're supposed to be. Nvidia, within half a deviation from where you're supposed to be. So everything. My point that I'm trying to make is, like, pretty much anything I bring up on the 1 year, 1 day chart, which has been reliable in the past, isn't necessarily like a bad thing in either direction to expect massive move in either direction, because it's trading on a statistical basis where it's supposed to be. Since it's where it's supposed to be overall, then I cannot say if 2026 is going to be an excellent year or a bad year. But typically, if the trend hasn't broken yet, then that trend will continue, as long as no outside forces emerge upon that. So I would expect the trend to continue to an upward trend, again, as long as no major catalysts come out that dictate it to the other side. So I do expect, more of a higher move. Yes, I believe that, algorithms still 100% dictate markets for sure. I can give you a really good example that what I mapped off on NVIDIA before earnings, the statistical mean level was 191.12, went up to 191.12. That was a gravitational point. It tagged it, it was below it, tagged it, reduced from there, then decided to pump up again. This is a 30-day chart. This is actually a really good chart to go based off of on a lot of things, but particularly on earnings. And it don't give you a long-term trend. It gives you a shorter-term monthly, in review basically. And a lot of people, like, each month they see different prices come up. Weekly, different prices come up. Every 180 days, different prices come up. In 1 year, prices come up. It's no different than like any other chart, but it just gives you more refined view of what has happened in review, so you can know what to expect next go around. On a statistical basis, though, that it wouldn't surprise me if NVIDIA pulled down to 180, 150. That is within reason. That's not outside the realm of possibilities. That's just something I see that's potential. It's been an upward trend ever since it cracked down to here, which, on a monthly chart and based off previous lows, that was more of an obvious buy down there. It's just algorithms buying it back up. Algorithms sold into here, but they're not very powerful like they was back here, or at least not yet. It's real similar. This one was more substantial downward initially, knee-jerk reaction, and this one wasn't. It's still kind of where it was in that peak. So that's more, it's showing less sell pressure than what it did this previous time. So leading into the new year, I think that's more of a positive than negative, but still like a pullback to 181.49. Many algorithms will see that as potential buy entry because it's just in the damn middle, you know. That wouldn't surprise me at all. It wouldn't surprise me if it pushed up much higher. What I had for last earnings, which I can't remember if it's ever tagged that before, was 217.33. I think it did. No, it didn't. 212.19. So 217.33 isn't outside the realm of possibilities either. All right. The way that, you know, whenever I do an earnings report and not report, but anytime that I comment on earnings and what I think it will do, potentially resistance and support, if it plays off my levels to a perfect degree, then I know that it is potential to keep on working because algorithms see it working as well, and so do I. So since the earnings from this past time isn't technically over with yet, then it can still push up to that 217.33. Since it did it here, and I've seen it make perfect support resistance in other places from this, then I can expect 217.33 to make more resistance. It's just statistically how I see things going. As of right now, it shouldn't do that. It won't do it like within the next 2-3 weeks. Well, maybe 2 weeks. It can, within reason, do it within 2 weeks. But this coming up week, it's not reasonable to expect that type of move. Because it just, what it does, and then it has to multiply that, and then it's kind of tapered off and consolidated more. So now it just takes, it's not in a power move right now, if that makes any sense. But I still see it, you know, not being negative. I mean, any of it being negative. I don't see like the NASDAQ, the Dow. I could bring up silver also. I was pretty accurate on mapping out what I thought silver would do the other day, and the top of the average daily range, for instance, it rejected perfectly from there. And the bottom of average daily range is here. I've seen it before, ping pongs between the two a bunch. I've seen that before plenty of times, and it should be silver on a technical basis of how powerful it is. You can see how the bottom of average daily range stair steps up, top of the average daily range stair steps up, and now it's at the bottom of average daily range, so it should, in theory, still, you know, maintain that momentum. And if it does, great. If not, I don't have a dog in the race either. But silver was more obvious the other day, especially when it gets a powerful move. Anytime like everybody and their mother's talking about silver, that's that's typically when you know there's time for a pullback, or like, you know, like you gotta actually look at the figures and stuff. You can't just say, hey, my grandma's talking about silver now, and she's like trying to cash in her old coins and stuff. Anytime you hear something like that, usually it's a time to exit the market. Or exit that market, or the top is coming in very soon. That's just historically the old wives' tale. Then the chart for me, like the major bullish move that it's had for many moons since 1125, has been bullish every single day. And before that it was barely bearish. Anytime the bottom of average daily range gets picked up, that means that it can still push up further. Like there's buyers at that lower level. So you go bullish for a long period of time, you go bearish for like 5 or 6 days. You have one blip of bearishness, but it all gets picked back up. You get another blip of bearishness. And technically you haven't like switched to bearish mode yet. It did have a whole lot of sell pressure though on 1229. It outpaced the previous buy volume, but the next day you had more buy volume and sell volume, which kind of stinks. The next day more sell volume, but on 1231 you had the first day it was actually showing up as potentially making a move to the lower side. And again, the bottom average daily range did get purchased up, and that could be all that is right there. That could be just a blip because it's looking for the bottom average daily range. And I'll show you again what that looks like and why it got picked up there. The bottom average daily range is this red level here. This is 1 minute, 1 day chart. You can see how it gets picked up very rapidly, and like even right there, like there's massive volume on the day. Like that's a good pump of volume. And then like even down here, that's not like massive volume, but it gets picked up. So that the algorithms that, dictate this, they like to see momentum building up also in confirmation, even though they know the bottom average daily range is here, and they do pick it up there sometimes. And then, like, if it correlates with whatever math they've done in the past a million bajillion times, then they'll pick it up either slowly or 1 2 contracts at a time, 3 4 5 10, and continue. Then they dictate the markets that way, and it's the snowball effect. It really is. I don't think I did anything with gold the other day. Maybe I did. Yeah, it's way below the bottom of average daily range. Whole lot of sell pressure past 3 days, but that's profit taking. You can definitely chop that up to profit taking, where it's the year end. People that have been long gold for forever just start taking their profits and taking it and leaving it, whatever. Yeah, I did map off one the other day for gold. That was kind of ugly. 161.8% level was perfect. Then what I thought should be, yeah. All right, what I mapped off the other day for that, the top of the average daily range was here. I'm not sure where the bottom is. Probably way below it. Anyway, 161.8% levels here. It picked it up almost perfectly. Not quite. I'm looking at it on a 5-minute chart. But what should have been supportive here by many algorithms, it went up to and rejected from there. That happens often as well. Previous support becomes resistance. It's not obvious to everyone just looking at the chart that don't map anything off. It's obvious to people that map it off and do the math on it prior to the move. Well, that's a perfect example. You don't get no more perfect than that right there, and that's indication of, like, you don't need to go long, even if, like, you're breaking down below the bottom of average daily range or whatever. It did need to pull back though. Gold did for sure. Kept on breaking down below the average daily range. Usually, like, whenever that actually flips, like on my setup, I'll show you. On my setup, is very powerful to the downside from 810 all the way to 1030. That's when you get a potential for reversal. I always got to say potential because nothing's guaranteed. But during that time, you had very bearish action. You could have jumped on board with that if you thought that it's still going to be bearish or whatever. If you've seen the previous support become resistance, and you can see the sell volume coming in, and then you can ride that wave potentially. But then whenever it skips that was the most bearish moment of gold in past several days. But whenever it stops doing that, then you can potentially get in for long. But you can see how quick of a drop that is and how difficult it is to reclaim any of that. The amount of time that you have to put in to reclaim anything. But you did reclaim some of it. It went above the bottom of average daily range, so technically it's where it's supposed to be at right here. I'm not sure why it rejected there. And I'm not sure, because I stopped mapping this off the other day. I'll have to go on demand in a couple of days and see if I can plot out why it did what it did. I can typically make a reasonable assumption of why stuff did what it did in hindsight. I'm not. Many charts repaint. Especially the volume weighted average price, the anchored one, it repaints. So that's why Thinkorswim is great, and you can do on demand and go back in time. But you can't go back. A lot of times it's at least 2 days back of business days, and sometimes it's 3 days back. So if I want to see, like, something that happened just here, I gotta wait till, if this was on a week, and I'd have to wait till Friday or Monday to go back and see what correlated with that. But I can go further back if I think that it's some mechanic in the market that happened, like on a Sunday. I can go back and view that right now. But I think this one here is the one I did on Sunday. Yeah, this is one I mapped off on Sunday. Highly accurate. not perfect. Nothing ever is. But again, it's like a snowball effect. I think I went over everything else that I care to go over. I can't remember if I know I made a video a while ago and I had to cancel it. I'll retouch on this if I have already. I do apologize. What I mapped out for the Dow the other day, before, let's see here, was that Sunday? I think that was on, no, this one was on Monday. Yeah, that's on Monday. What I mapped off there, what I was expecting to make support or resistance or the gravitation point. Let's do the gravitation point. Gravitation point on this, on the Dow was 48,832. That was gravitation point. But what it showed up in pre-market and stuff was 61.8% level. Never could get past it. Never. Usually, like, the 75% level made perfect support, but then the 61.8% level made resistance again. That's common sometimes in pre-market. But it also showed that it wasn't trying to break above. It just refused to. The algorithms or the powers that be just refused to let it get past that. So looking at that in hindsight, I say that's more of a rejection point than anything, and you need to not bypass that because other people and algorithms and big market participants are not allowing that. The day before this happened, though, I did talk about the bottom of average daily range being support because as far as like the major indexes on the Dow hadn't reached the bottom of average daily range yet. It was the last holdout from what I had mapped off, and this level here was also there. So algorithms just happened to pick up the bottom of average daily range. They picked it up and then they shot it up to that same damn level again, 61.8% level. That's what they shot for. And the following day, yesterday, whenever I was mapping this off, what I was hoping for is to actually meet down here. What I was planning on doing is buying into 48,545 and then selling, taking all my profit at 48,672. That's where I was expecting to take profit at. That was the volume weighted average price yesterday, and again, like a lot of this crap repaints. But anyway, that was the level that I would have took profit at if it would have came down to my level prior to that. In hindsight, and hindsight's always 20/20, but also the statistical mean doesn't give you, it's a flip a coin area. It really is. It like, I guess I should have analyzed this better. That's why it's good to watch one. It's good to see multiple ones on the indexes, but it's good to focus on one because like the human brain is capable of doing more than one thing and having 100% concentration at one time. If you see people having like multiple charts up and stuff and actually studying each one of them while it's happening, that they're not capable of actually analyzing every bit of that information coming at them. It's impossible to do so. For the longest time, I still believe that the S&P 500 dictates everything else. Whenever they're more in unison, I guess they're their own entities are acting somewhat independent now because But anyway, in the past, the S&P it's been dictative of the rest of the entire markets. It's been dictative over everything. But anyway, the Dow was the last holdout for the levels. The other levels I had either went down past it or close to it or whatever. But for this one, for the Dow, I was expecting to come down to here, this blue cyan level. Then I was expecting to take profit up here. That's what I was hoping for. I should have shorted here. In hindsight, it's always 20/20. For me, though, it's not wise to take a short there because you're more likely, on a statistical basis, it's more likely going to go up. So, or, I'm sorry, when it's here, it's a total flip of the coin. But whenever it's here, when it comes back down to the level, that's when my alert actually went off. When it comes down to here, then you're more likely to go up. And you can see how, algorithms eventually pick it up and try to bump it up. And then the profit taking just kept on happening yesterday. But that's what I should have expected yesterday. I'm sure other people have seen that same exact setup before, like, holy crap, here we go. This is exactly what happened 17 and a half years ago, whatever. Or 17 years ago because of January 1st. But anyway, like there's people that seen like the same exact setup or algorithms that seen it. They can analyze every single chart, map it off, and do on demand, and like they have like records of it kept, and they go way more detail than I do. I mean, I got like a regular job and like family I got to take care of, and try to do what I want to do as well, which is the market sometimes. But anyway, what happened with the Dow yesterday? It would have been nice if it would be like super clean and actually did it exactly how I was expecting it to do. But many times, whatever I map off to be potential for support that I know algorithms also use, then it will at least come up to that level. That way, if they do go long here, then they can exit again and then go short if they need to, then catch profit to the downside. That's what happened later on in the days. It went up and surpassed it. It was very powerful through here, but the rest of the day was all chop. I was expecting chop, but to be closer to the statistical mean up here. This is where I was expecting markets to stay around as long as it wasn't massive profit taken yesterday. And it was a lot of profit taken. It's obvious in hindsight. But anyway, like the Dow has less chance of going down than up right now. It'd be sweet if I would be very accurate at 48,189. Check this out. I'll do an alert. And not that anybody cares or ever anybody even see this crap. But I'll do an alert, and then if it does come down to there, that's an old level though. That kind of sucks. But if it wanted to play off that level, sometimes it as long as like the what shows up on a statistical basis is what's supposed to be support and resistance. If it never does tag either one of those, if it stays near the statistical mean all day or whatever, then that level sometimes can be more productive than anything else that you can possibly do. You do have potential for higher move on this evening into tomorrow. You have $313 move. That's times 5. That's $1,500, right? So the entire move there is substantial. The entire move is within reason on a statistical basis, and historical basis is 528 for sure. So if you want to, if it does come down to 48,189 as of right now, my statistical mean is at 305. So that is significant. And then if it does do the entire move, which is not smart to expect an entire move, just not usually. You want to, or in my theory, or my opinion, is you want to go for half of the move, because that happens so often. It's like the volume weighted average price was up here the other day. If you went for further than that, you was on the foolish side. So history dictates what you do in the future, especially in the markets. They don't ever do the same exact thing. Well, they kind of do. They typically don't do the same exact thing like 2 days in a row, except on like Christmas Eve and the day before Christmas Eve, for whatever reason. That's the day, or that week is like you've seen the same exact thing 2 days in a row. That was kind of crazy. I guess that's like a Christmas move or whatever. Like they give money to whoever pays attention. But 5 times 5 is $2,500. So $2,500 total move this evening and to tomorrow. Again, there'll be probably some more fallout from the selling of the profit taking that may still transfer through. Some ripples in the markets from that, I would imagine. So it's not wise to expect that broad a move to go from 48,189 to 48,758. It's not wise to expect that. It's just not. That wise expectation would be to look at it at 48,189, have your alert set for there, then expect a move up to 48,495. If that happens, that's within reason. It truly is. It's It's more outside the realm to expect the whole broad move. It just is. So, but what I kind of expect, since it's the holidays, you won't get a massive move. People are hungover. Algorithms aren't hungover, and computers aren't hungover, but people that dictate what their computers are doing, they're hungover or whatever. I didn't have an ounce of anything. Went to sleep like at 9:30. Anyway, hope you had a good New Year's, and hope 2026 continues to be good to everyone. Hope you're happy, healthy, and well. Goodbye.